The world's most liquefiable financial market is the foreign currency market or Forex. This entails the global trade of different currencies. In this market, traders are allowed to buy or sell currencies whenever they see fit. In our earlier video we have learnt about what the Forex market is. If you have not watched the video yet, please click on the I button at the top right corner of your screen. Although Forex markets provide many benefits, there are also drawbacks to this sort of trading. In today's video we will learn about the advantages and disadvantages of Forex trading in simple language. At Finance Doc, we will be sharing more explanation videos related to cryptocurrencies, trading, Forex and many more. So watch this video till the end and hit the subscribe button and click on the bell icon to get notifications for our future videos. So let's begin the video. Advantages of Forex trading. The lack of limitations and inherent flexibility of Forex trading is one of its main benefits. Markets are open virtually constantly and there is a huge volume of activity. As a result, those who work standard office hours can engage in trading at night or on the weekends, unlike the stock market. When it comes to the various trading alternatives, there is a significant level of optionality. There are many different sorts of agreements, including future and spot agreements, and there are hundreds of different currency combinations. Compared to other markets, transaction costs are often quite low, and among other financial markets, the permitted leverage is among the largest, which can increase gains as well as losses. Disadvantages of Forex trading. Leverage risks exist in Forex markets, yet it also has benefits. Leverage is widespread in the Forex market. The permitted 20 to 30 times leverage might result in enormous rewards but can also quickly result in enormous losses. Though its near-constant operation may be a plus for some, it also implies that some traders will need to use trading algorithms or computers to safeguard their investments while they are abroad. This can raise costs and create operating risks. The other significant drawback is counterparty risk, where it can be challenging to regulate Forex markets due to their international nature and frequent trading. There could be a default risk because there is no central exchange that backs a trade. The bottom line. Compared to other markets, Forex trading has a number of benefits, including a variety of contract types and trading that is nearly always open. Additionally, it enables traders to multiply their trades by 20 to 30 times, which can boost profits. The risk of this leverage is that it can quickly cause substantial losses. Thank you for watching this video. If you like this video, don't forget to hit the like button and subscribe to the channel so that you don't miss out on our upcoming videos.